We spend so much time making money. We gotta work, we gotta pay bills, when in reality, to build sustainable wealth, meaning you don't have to keep creating it all the time kind of wealth, you have to have a plan. What good is it if the people you're doing it for don't have access to it when you pass away? And that is how a wealthy person thinks. I wanna make sure the Walton family who owns Walmart, their kids are set up.
Most of us get phase one right. Phase one is making money, but we all get stuck at phase one. Mm-hmm. Phase two is multiplying the money. Mm-hmm. And for me, phase three is protecting and preserving the money.
It has to work or it has to work.
And I just want to go ahead and take a minute and thank our sponsors, right? Brought to you by our agency, Circle of Greatness Agency, where we partner with coaches, consultants, course creators, and online business owners just like yourself, and we help you scale. We've been behind the scenes of some of your biggest digital brands, some of your biggest digital coaches. We now inject our proprietary digital system behind them to help them grow. So if you're looking at this, you're a coach, you're a consultant, you're a course creator, you are looking to have a webinar, you're looking to grow your income, you're looking to become a better speaker, our agency can help you in various ways. So if you're looking for a partner, if you're looking to learn more, if you're looking to see how we can help, go to www.partnerwithneo.com right now so you can learn more. And without further ado, get ready for the most impactful, most enlightening episode that you have ever experienced.
Welcome to Circle of Greatness. I'm your host, Nehemiah Davis, and today we have one of the most highly requested entrepreneurs, CEOs to come back. Like y'all keep saying, when is Ashley Fox gonna come back? When is she gonna come give us more game on building wealth for our family? How she's doing it for her and her family in hundreds of thousands and not millions of people around the world. So without further ado, I'm really excited to bring back Inc. 5000, not 1 year, but 2-year recipient winner, Ashley Fox. What's up, sister? How you doing?
I'm doing well. How are you?
I'm great. Thank you for being here.
Love the intro. Love the intro.
Yeah, gotta do it right. Gotta get it right. What's been new? I mean, I've been seeing you on your health journey crazy. You in the gym every day.
Yes.
Monitoring everything. Your sleep score. Like you are all on it. How important from last time? I know it was health, but more wealth building. It seemed like equal now. Like tell me what's new. What's going on?
I think as I've evolved, I think when you run a business, especially when you're growing and trying to scale, you have to be so present. And in order to be so present, you have to be the healthiest you ever been from a mental standpoint and a physical standpoint. So I think it's a way of life now. Like I work out every day. I got about 3 abs right now. I'm working on getting all 6. But I think I just need to have all the energy. So I prioritize my sleep. I love this Oura ring. I prioritize my sleep. I'm eating healthy. I have a chef that's cooking for me. I'm working out every day. But in order for me to be as present as I need to be, as sharp as I need to be, as confident as I need to be for the people that I serve, I have to be my best version. And sometimes your best version isn't always having the most money, right? It's also having joy, feeling healthy, looking healthy. And so for me, it's a non-negotiable at this point. I have to be my best self in order to show up for myself in the world. So
that's good. Yeah, that's good. I think that's a very powerful thing just to lock in. I mean, I've been on my health journey, but I've been falling off with the food. But I feel like I just solved it. You said get a chef. I'm like, I'm like, wait. I've been trying to figure out the problem. I'm like, wait, that's the problem. I don't have anybody making sure I'm eating right. So I did cook. So I want you to know I can cook and I have cooked. I'm just so busy. And I don't want to be so busy that I forget to eat because I need the food to fuel my body, to fuel my mind. So I have a chef. He knows what I like. I have custom meals made every time, but I eat fish and I eat vegetables. And sometimes if I'm feeling a little sassy, I might get some rice. But that's really just what I'm focused on. So I'm eating 3-4 times a day. I have it on my calendar what time I'm supposed to eat, just because I could go over in a meeting and it's important for my assistant to know, hey, she has to eat. Like, because if I don't eat, I'll be so busy that I'll lose all of my energy and I need food to fuel my body, 100%. But I don't have the time. And I think when you get to a point in life where you are busy, it is more important for me to financially empower the world than for me to cook a meal. I want to hire somebody who's phenomenal. Their God-given purpose is cooking, right? Like I cannot cook the way my chef can cook, and I like different meals. And so
my chef knows, okay, this is the certain amount of foods I need to eat, how many grams I gotta have of protein, and he makes that in his great special way. And all I do is just kind of plug and play. If it's time to eat, I have my meals already prepared. He drops them off, but I need the fuel to be present, especially as a CEO of a business. Yeah. I'm going nonstop.
Yeah, that's good. I like that, and I think it's a lot of times people, you know, not pity themselves, but they feel like, oh, I can't do it. You don't need to do it all sometimes. Right. You need to focus on what you're great at and let someone else do those things that you're not great at.
And you will find the money, you will find the resources, you will find the time. Because if I want to eat right and eat the healthiest, it's actually easier for me to have a home-cooked meal than it is to go DoorDash all the time, especially if I want healthy foods. And so my chef and I have a great relationship, Chef Rod. Shout out to Chef Rod.
Shout out to Chef. Shout out to Chef.
But yeah, no, I need energy to be my best self. Yeah. And without food, I can't do that. Without the best foods in my body, I can't be my best self. So yeah.
That's good. Let me ask you this, because I think this is, and I don't want to take you back because we talked about, you know, losing your father, and I don't want to take you there in a mental state, but that has really put you on a journey to helping hundreds of thousands of people around the world leave here the right way, like in terms of legacy, in terms of insurance, in terms of leave. Like ever since I heard the story, like this wealth game and legacy, you don't do it in one sitting.
Right,
like it's so I've been working I don't want to be on the internet preaching financial freedom, and then when I leave, it ain't like crap messed up. So why is it important? Like I think for people to get their financial house right, and what are some keys to doing that? Like right now, I just did all these new paperworks, the Advanced Health Directive. I did I did when you told me I went in every bank account, added the beneficiaries. I'm so excited. I'm just marking things off my checklist because I'm like, if something happened, my wife will get this, my mom will get this, my children will get this. So why is this so important? It's my number one priority right now.
I think regardless if you have a lot of money or not a lot of money, your first priority is let me show up for my family, right? Good. Everything we're doing when it comes to working at our job, running our businesses, how can I make sure that I'm in a better financial position, but most likely you're doing this for someone else that you love and care about or that you're responsible for. So it's you being your best self to be able to show up for your family and putting yourself in a position to create wealth, right? Whether you have a job and you're making a lot of money or a little, every dollar counts. And I always tell people, you may say you want to operate and you want to be a millionaire, you want to think like the 1%. Well, this is what they do. Think about if you work so hard, just think to you, like you work so hard to make money, regardless of how much you make, you don't want to lose it. You don't want to lose it while you're here. You don't want to lose it when you're not here, but it's your responsibility now. And I think we spend so much time making money. We gotta work, we gotta pay bills, when in reality, to build sustainable wealth, meaning you don't have to keep creating it all the time kind of wealth, you have to have a plan. You have to have a structure. You have to treat you like a business. And, like, if I were to sit here and say, hey, I wanna invest in you, are you in order? Are you an actual solid company that is showing growth, that is showing progression, that is showing sustainability? If you are not that person, we have to do an inventory check of your life of what you're doing. And when my dad passed away, what it did for me, because I worked on Wall Street, so I was working with millionaires and billionaires, and I saw how they operated with their life and their money. And I wanted to be that. Now, I felt a little intimidated, but at the same time, I knew if they could do it, Ashley could do it. Well, what are the steps? So let me follow their blueprint. First thing is they had an investment account. They had brokerage accounts, right? So they're investing. They had multiple accounts with different names based off of the goals that they set for themselves, right? So I only had one checking, one saving, yet I'm around millionaires and billionaires. They have 30, 40 different accounts with different titles for different purposes that are associated with different goals. So I started to open multiple accounts. Now you're doing all this work, right? You're putting in all this effort, all this energy to make money. What good is it if the people you're doing it for don't have access to it when you pass away? And it goes a step further because there was a point prior to my dad's passing, I had life insurance, I got money, I'm doing okay. But if I passed away, nobody would know where my money was. So if you have a brokerage account,
that's where I was at now.
You have an investment account, your family, they don't know what that is. They don't know where to go. They've never had to call a life insurance company and go get a death certificate and submit the paperwork. They don't know these things. They don't know what a brokerage account is. They don't know how to buy a stock. So how do they know that you're even leaving it for them? And so when my dad passed away, he had a lot of things in order. And it made me realize how out of order I was, even though I was passing something down.
Yeah.
And so it's thinking about, okay, while I'm building, how am I make sure I'm preserving? How am I making sure it never runs out? Even if it's a little bit, you're not working this hard. Let's say you have $1,000 in your brokerage account. You're not working this hard so that if you pass away, it just sits there.
Yeah.
Or I teach people how to build wealth and collect passive income, whether you're using REITs or dividend stocks or ETFs. That passive income you want to live off of can be passed down. The dividends don't stop getting paid if you're here. If you're not here, you have to pass that down properly. So it's one thing to get you educated because you are the person that's going to financially set your family up. Yeah. You are the person that's going to financially get your family's life in order, but it's your responsibility. This is your money, right? Nobody's going to make you the money now. Nobody's going to make sure it's set up. So it's your responsibility. And so when my dad passed away, he had everything in order from every account, all his credit cards. Who
taught him?
So this is, and I literally, this went through my mind because I'm like, how did my dad know this? Yeah. Right. And I'm like, you would have thought he went to the Amplify school. Like he sat in my classes and I don't know, but my dad was in law enforcement. And so when
they're not teaching them that in law enforcement.
But when you're in law enforcement, you don't know if you're coming home the next day. So because he's the sole provider of his family, at any moment he could be gone. My wife, I'm taking care of my wife. I'm taking care of my 3 kids. I'm doing this for my family. I have to make sure they're okay. Because when I went back in my dad's paperwork, he was making sure things were set up when I was a little kid, before my brother and sister was born. And you saw the evolution in him changing beneficiaries, him getting more life insurance, him setting himself up to make sure we were set up. And in that moment when he passed away and I got everything together, I knew that it was possible for the everyday person to do it, right? Because I'm around millionaires and billionaires working on Wall Street. I'm going to be the reason the world sees that they could do it because, I'm not the Wall Street client. I've been kicked out of places, but I'm going to become that client. But in reality, when I saw my dad do it, he didn't have a fancy job on Wall Street. He didn't go to college, but he was able to make sure his family was set up when he was living and in his passing. He was able to make sure his children get paid for the rest of their life. And it's like, I want to show the world the blueprint he left me and find a way to show the everyday person, you don't have to be on Wall Street. You don't have to have millions of dollars because my dad didn't do it, but he made sure that he was responsible enough to take care of his family. And that's not even just an education shift, that's a mental shift. Yeah. He thought differently, he served differently, and we have to put ourselves in a position to do that, but we just get so caught up in the moment of making money when in reality, it's not just about making money, especially if you are the first person in your family to even take care of your family or to have investments. It is your duty now, and that is how a wealthy person thinks. They don't think about, let me make some money. I want to make sure the Walton family who owns Walmart, their kids are set up, because why did I build Walmart for it to go away if I'm no longer here? So it's about a legacy now, and I think that comes with a mental shift, not just a financial shift.
Hey, if y'all looking at this episode, I want you to stop what you're doing. I want you to go to cfcsummit.com. And when I really think about, I'm letting you know that there's nothing more important right now than you getting your financial house in order. This is me. I'm trying to get my house in order like this. And I know it ain't a game that you get it right the first time, but there's not a better person in the world that's going to educate you, that's going to show you the exact steps you need to be able to do to get your financial house in order so you too can leave something for your family. No more fish fries, no more GoFundMes, no more asking to borrow something. No, you're about to get all of this right when you spend this 5 days with Ashley and the Amplify team. Go to www.cfcsummit.com right now. And listen, pause the episode, do it right now, and in the comments say, yo, I got my platinum ticket, I'm in the room, and then finish watching the episode. So Ash, it's so funny, I recently signed, and I don't know if I signed these already with my trust and my will. I know I did this years ago, but I recently signed a financial power of attorney, the healthcare power of attorney, the advanced health directives, and the letters of intent for real estate. So those are like recent things that I just done.
Those documents, I'm not an estate attorney, I just want to make it clear, but I do know if something happens to you and you are alive, let's say you're physically you can't do anything, who's in charge of your money now? Who's in charge to make health decisions for you? Those things are important. So, and you typically do those I know I did that when I put together my trust. It kind of came as a.
And I believe they were like, well, you did this already. And I'm like, I'm double checking.
Yeah.
I said, I ain't in the game because you said something. I want really people to get it. Like, most of us get phase one right. And I don't care if you're an entrepreneur or you're working a job, but phase one is making money.
Yes.
We all figure that out, whether it's a job, whether it's a business, but we all get stuck at phase one. Mm-hmm. Like I've finally has ascended to what I call phase 2 and 3. Phase 2 is multiplying the money. Mm-hmm. And for me, phase 3 is protecting and preserving the money. Mm-hmm. So now that I be tapping in with you, now I'm like, yo, like, what good is having this money sitting around if it ain't multiplying because of the darn, what's the thing called?
Interest rates or inflation?
Inflation is eating my darn money. I think it's 9 or 10%. I don't know what it is a year, but after a year, $1's not $1 no more.
Yeah, no, it's not.
So what are some things to multiply? Like, I know one thing you're helping people do, and I really like this because this is anybody could do this. They can own real estate for less than $200.
Yeah, so
and most people have no clue about that. You're the number one educator on that.
Most people think it's fake.
Yeah.
So one way
sounds crazy, though.
It does.
Yeah.
It sounds crazy because of how I position it.
Okay.
But I position it in a way for you to be like, she's lying. Yeah. Tell me more. And then you find out like, oh, this is actually real. Like you can actually get paid by law. Yep. And so a real estate investment trust is where the everyday person, so this goes for anybody. I have an 8-year-old niece that gets paid dividends and gets money every month. It's where you can invest in a real estate company that owns, operates, and manages commercial real estate. So 1 out of every 3 properties is owned by a REIT. So you can walk into a mall, a shopping center, a data warehouse, an apartment building, and it could be owned by a REIT because real estate is owned by a person, a company, or a REIT. Now, when you buy, so you buy a REIT the same way you buy stock in the stock market. So you want to get a brokerage account. 1, you can put in as much as you want, as little, and you can take it out when you want. So it's not a real estate fund because your money's not locked up. Yeah. It is considered liquid. When you own a piece of that real estate company, now that real estate company, they will go and find the properties. So they're going to find, so let's just say it's a retail REIT that owns shopping centers. They're going to find the shopping centers. They're going to get them all together. They're going to find the tenants, right? So also make this clear. You're not buying a REIT to flip. I am not the person that's going to get you rich quick. I'm not that good, but I can make sure you have consistent income and build wealth forever and can pass it down. Yeah. Now, when you buy a REIT, you're not looking to flip your money because when you think about commercial real estate, people aren't buying it to go flip their money like a single family home in an up and coming neighborhood. So they're going to get those tenants. The tenants are going to pay rent. When the tenant pays the rent, the REIT collects the income. Yep. They pay all their bills, right? After the bills are paid, there's money left over. It's called a profit. By law, a REIT must pay out 90% of its profits to all their shareholders. Wow. So now you're owning a piece of a real estate company that by law has to pay you passive income. You're going to get paid every month or every quarter. So the REIT will determine how much you get paid per share you own. So if you buy 1 share right now and never buy a share again for the rest of your life, you're going to get paid consistent income. As long as that REIT exists, as long as that REIT has that income coming in, as long as they are still considered a trust, you're going to get consistent income. The goal is for the everyday person to buy thousands of shares, right? Which could take time, but if I look up, I mean, I'm 36 years old. 10 years ago, I was 26. I was fresh out of Wall Street. I was literally just starting my company, and I remember it like it was yesterday. But at the same time, if I would have started investing when I was 10, and I'm constantly buying shares, and as I was working at Foot Locker, I had little jobs here and there, I could have thousands in income right now just starting small. And most REITs are less than 200. Like I own REITs that are $10, $11, and they're paying me income. And you're going to make anywhere between 4 to 17%, which beats inflation, which beats your savings account. And you don't have to manage the property. You don't have to talk to tenants. You don't have to fix anything. And you don't have to borrow money from the bank. So this is a way for, and this is not to say that real estate, buying a direct property is bad. This is just another option for the people who don't have a lot of money, people who don't have the time, people who don't have the credit and don't want to borrow money from the bank. You can go buy a REIT, takes 5 seconds to buy for $10 and get paid every 90 days. Your goal is to multiply that income and buy more shares because next thing you know, you look up and that income is thousands of dollars, and now you've created a stream that replaces your job's income. So it's just another way for the everyday person to get into real estate without having to wait months to close on a property, but are in a position to get passive income. And so I think it's a really great way for the world to get into real estate, a great way for us to collect passive income, But if you only have $10, you're in the game now. Is the question now is how many $10 can you get to consistently grow that income? The same way you buy a property. I can buy one property and let's say I make $1,000 in rental income, but if I want $10,000 in rental income, I'm going to have to buy more properties. The same thing works for the REIT. You could just do it on a smaller scale, but get to the passive income that you need without having to do any of the legwork. So I think it's a great opportunity for people to really build, for people to really grow and not feel intimidated, not think they're not good enough or not think they can't do it. But this is another option for people.
I think starting is better than not starting.
Absolutely.
You know what I'm saying? Like, and I'm trying to actually pull up. You gave me recommendations. What are any of your favorite tickers? I'm serious about this thing. I'm trying
I want
to
to
really
give this
learn
disclaimer. I am not a financial advisor.
We'll put a disclaimer in the
Yes, I am not a
screen.
financial advisor.
Yes.
I have no problem telling people what I invest in, but also know that I'm a 36-year-old woman who lost everything and built a business. So I probably have the highest risk tolerance out of everybody watching this, and I would do it again. But at the same time, I have my goals and my dreams. So when you think about what REIT you buy, your time horizon, your goals, your vision, your income makes that decision. But I can tell you this, you buy a REIT today, within 90 days, somebody's paying you some income. Me personally, so one REIT that I like that is fairly simple, everybody knows is Realty Income. They pay out, they call themselves the monthly dividend company. So just imagine we got companies bragging about paying you every single month.
That's good.
But they own over 15,000 properties. And I don't care how successful I get in life, I have no desire to own 15,000 properties.
Yeah, neither do I.
But I will gladly own a company that does own 15,000 properties. But they've been paying dividends. So when I say dividend, that's the income you'll receive when you buy the REIT. So it's another word for passive income in Wall Street language. They've been paying dividends for over 25 years. So just imagine a company has been paying you for 25 years, every single month, never missed a payment, and every year they've increased your income. So it's like you're getting a raise, but you don't have to work at the company. But they have tenants like 7-Eleven, Walgreens, they own the Bellagio Hotel in Las Vegas. They own a lot of Dollar Tree, they own a lot of single tenant properties, but recession-proof companies, which is why they're able to consistently pay you more income, whether the market is down or not. Because whether you like it or not, you're probably going to go to a Walgreens. You're probably going to go to a 7-Eleven, whether you have a job or not. But I know a lot of people who retire utilizing this REIT. They get their consistent monthly income. And they still have room to grow, in my opinion, because they have not bounced back from where they were pre-pandemic. So real estate as a whole took a hit during the pandemic. And as rates continue to be lower, which the Fed is intending to do, real estate will eventually bounce back. When real estate bounces back, REITs are considered real estate. When interest rates go lower, or when interest rates get lower, companies have more money, which means they have more ability to buy more properties. They have more ability to pay you more income. And so REITs do mimic the real estate market. The only difference is you will still get your passive income regardless if the market is up or down, regardless if the price of the REIT goes up or down, because it is a law that says they have to pay you. If the market crashes today, your REITs are going to pay you passive income because they have to. It's a law or they can't be a trust.
That's good. I think you put me on SPG. Did you tell me to get that?
Yeah, that's Simon.
I'm up 24% on that thing. Yeah.
That's Simon Property Group.
And you had me buy, what's that?
I don't listen to him. I did not have him buy anything.
She didn't have me. She said what she was buying, and I just bought it. Let me just make sure I'm saying. I'm sorry. Let me make sure.
Don't listen to that.
All right.
So yeah, O is Realty Income.
And I'm aggressive like you. When I hear somebody say buy some stuff, I'm like, I'm putting black on it.
Don't follow his instructions.
Okay, yeah, don't follow my instructions. Listen to her.
But yeah, SPG is Simon Property Group. So they own
King of Prussia, right?
King of Prussia Mall,
Lennox
and Phipps, the Gallery in Houston. So they are the #1 mall operator in America. So I challenge you, when you go to a mall, look and see whose name is on the wall. Yeah. And if it's a Simon Property Mall, I know everybody has been to a Simon Mall because they're the #1 mall operator in America. So what happens is you walk into that mall, you go to a store, that store pays rent to Simon to have their store there. And so Simon collects all the rental income from all the tenants in their mall. They pay their bills, and then they pay out dividends every 90 days to their shareholders.
Gotcha. Let me ask you, what is your philosophy, or how do you look at so for me, I was literally it's funny, I'm talking to a guy earlier. He's asking me questions. I'm like, yo, bro, this is like, you should hit Ashley. Like, she like, you're asking me stuff. I'm not an expert in stock investing. He was asking me about how do I change this? I'm like, I don't know that. But I've learned that you got to identify what type of investor you are.
Yeah.
Like for me, I'm a buy it and don't ever look at it again type of investor. Like I'm a set it and forget it. And then you got somebody who day trade. I don't got the appetite or to be looking at charts so I'm more interested in buying, I believe they call them blue chip stocks, like things that are Apple and Nvidia. What are your thoughts on long-term stocks? How do you identify if it's something you should buy or don't buy from your perspective?
So when he mentions blue chip stock, blue chip is the most expensive chip in poker. Okay. So blue chip stocks are typically the biggest, the best companies on the market, right? Okay, so your big household names.
Yep.
Me personally, the type of investor I am, so I'm not necessarily a set it and forget it, but I am a own it and let it rock, right? Like if I buy a company, my intention is we're in a relationship for the next 5 to 10 years. Yeah. Now you might mess up. Yeah. You're not perfect, but I do believe in the future of our relationship.
That's good.
So I don't buy any company if I don't believe this company is going to be around in the next 10 years. If I don't believe they have the ability to grow in the next 10 years, then I won't buy it. Because I'm not investing for my today. I'm ensuring that I'm set for the rest of my life tomorrow. And that's what matters to me. Now, when it comes to me, and I like the big boys. So I'm like you. I don't trade. I don't want to read stock charts every day. And I know tons of people who make a bunch of money doing that. But I know the type of person I am. My heart is in financially empowering the world. I'd rather read a book on how to teach better than a book on the stock market, right? That's just my personal preference. Now, when it comes to investing, I pay attention to what goes on in the world. While you may not like all the wealthy people, you have to get out of your feelings and see what the big boys are doing. Yeah. Who runs this country? We have lived to see $1 trillion businesses. And it's like a lot of these $1 trillion businesses, from a Microsoft to a Facebook to Nvidia to a Apple to a Amazon, we are their customers. Yeah. So the first step is like, okay, well, where am I spending my money and time? Who gets so much of my money that I'm making in my career? Who am I giving my money to? Because if I'm giving them my money faithfully, let me go look at their financial statements. How much money are they making off of me and everybody else? Next thing you know, you look up, wow, it's $1 trillion business because I can't stop shopping on Amazon. Because I refuse to have, and this is no disrespect to anybody, an Android phone. I am an Apple user. I have 3 phones. I have an iPad. I am loyal to Apple. Well, Apple literally makes billions and billions of dollars because I'm loyal. How many other Apple loyal users are there? In my mind, I don't have to go fishing for a company. Let me go look at the financials of the companies that I actually can sit here and tell you I believe in because I believe in it because I give them my money. Yeah. So I think about it that way. But I also look at who's changing the game. I mean, I think AI is just changing the world in general. And I think we have different groups of people. You got people who AI is going to change the world. Yeah. How can I make money with AI? Then you have another group, AI is taking over the world. I'm so scared they're going to remove jobs, where it's like one is a lack mindset, one is an abundant mindset. I refuse to think AI is going to replace me. I'm going to figure out how I can maximize AI to become a better person, to make more money. But at the same time, we can't get rid of AI, right? Yeah. So who's investing in AI right now? Who's spending billions of dollars in AI? If that is the future, who's investing in their future? Well, I want to look at those stocks. And essentially, it's a lot of the big boy companies that have the billions of dollars and they literally are all fighting with each other now. They're all hiring each other's employees. Yeah. It's like, look, while y'all fight, I'm going to build wealth. Yep. And I'm going to own a piece of your company because somebody going to come out winning. And most times, you all have been winning at this point. You are so big at this point, America can't do without you. I don't want to do without you because I'm using your products and services. So instead of me just being a consumer, how about I own stock in you? And so sometimes for me, in the beginning, before I go look at stock charts, before I go do heavy research, it's more of just an understanding business. A stock is a company. Who is growing? Who has the ability to grow? Who is serving the world in a way that they need it, where they can continue to make money? I want to get in. And so for me, it is easier for me to do that with household names that I know. It is easier for me to do that with companies I give my money to, because I don't want to research a random pharmaceutical stock because I could care less about pharmaceuticals. Yeah. I have other things I want to do, but I do like the big names. And up until this point, I've been investing since 2011. The big names have not steered me wrong yet. They have only gotten bigger.
What's some of the big names you like?
I'm not a financial advisor. No.
I ain't saying buy it. I just said because I want to make sure I ain't missing
Okay, so I always tell everybody that comes to our summit, I tell all our members, I am married to Amazon.
Got it.
Amazon is till death do us part.
Yeah.
They can do no wrong in my eyes. You can dislike Amazon, you can dislike Bezos. I have never met the man, but that is one company that is the second largest employer in America. And I don't know if people know what that means. It means if Amazon disappears, the unemployment rate will literally go up.
Wow.
America doesn't want you to not have a job. They need you to spend money. So now we're talking about the second largest employer that employs people in America. Not only are you a necessity to my life, you are a necessity to the country I live in. So and you also make over over $100 billion. Let me make that clear, over $100 billion every 90 days. Like, I just want $3 billion. They make $100 billion every 90 days.
It's crazy.
And it's like, I've owned Amazon since like 2017. I made a ton of money, and I still think they're continuously to grow, and I'm okay. Like Amazon can mess up, they could have lawsuits. Everybody got problems, but in reality, I'm still buying my groceries every other day on Amazon. I am still buying paper plates on Amazon. I am buying my soap on Amazon. I'm buying a shower cap. So in reality, my life, Amazon is a part of my life, and it's a part of my bank account. So as Amazon grows, so does my wealth.
That's good. And it's funny. I'll just look. I'm up 79% on Amazon. I'm serious, man. I messed up too much not understanding this wealth game. Like, just if you could put your money in, like, I don't know stocks are returning 10 to 20%. The S&P, I believe they said.
Yeah, it depends. Anywhere between 8 to 10% on average.
On average.
That's if you buy all the stocks.
But you know what my bank account is giving me? You know what I mean? Zero. Like my savings account is 0.000.
And it's going lower, y'all.
It just don't make sense for me.
No, this message is for people who are scared, because I think you've grown to have a stronger risk tolerance.
Yeah.
I think it's just really taking inventory of your life. If you've been taught, because we've been taught to go to school, get the job. You get the job so you can pay back school and you buy a house, right? You're taught to save money. Investing is scary. Investing is for rich people. It's gambling. But in reality, when we look at everyone in our circle, everyone in our family that has never invested, have they created the life you want? Because we've been saving. We're really good at saving. Yeah. We're really good at working. But you can't save or work your way to wealth. You have to invest your way there. You either got to build your own company and or invest in somebody else's company. And you don't have to start a business. You can just own a piece of Jeff Bezos' business. And at least you give yourself the opportunity to grow your wealth versus solely making money at your job, which is not a bad thing. But in reality, there has to be something different, because it seems like wealthy people work the least and 99% of the world work the most. Yeah. But it's not that, it's they do it differently, right? They're not operating out of a place of lack, they're operating out of a place of abundance. They want to create more. They know they have the power to create more, but the same power Jeff Bezos has to build $1 trillion business, so does Ashley Marie Fox. And I don't even want $1 trillion business. Like, I don't. But I have the same power he has. Yeah. The color of his skin does not matter. The fact that he is a man, it does not matter. I literally can do what he did. Like, and again, my belief also comes from, I was in the bank accounts of these people. Yeah. So I always tell people, just borrow my belief system. You can't tell me we can't invest our way to retirement, because you can't work your way there. You can't save your way there.
And how much you got this awesome group. What did y'all invest recently, like as a collective?
So collectively, as of today, I think it's about $13.5 million.
Wow.
And like, I would say more than 90% of the people never invested before they came across my company, Amplify.
So they found you on the internet, they learned from you, and collectively over $13 million invested.
Correct, yep. Wow. And these are people who started with $20, right? Wow. Like, you don't, but it's okay to start with $20. You're never gonna end with $20. Yeah. You're gonna keep building, but a whole lot of $20 will get you to $13.5 million. And the thing is, what people don't understand is, even though you're starting small doesn't mean you end small. Yeah. I started, when I was investing for my niece, I started with $35. Every quarter, I was adding an extra $5. It was $40, and I got to $50. Now I can invest thousands of dollars for my niece, but it's been 8 years, right? Like, just over 8 years. I mean, my niece has over $5,000 in passive income coming in, and she's 8. Wow. But it's because I started with 35 and I did not quit. I think we spend so much time on, I'm starting with a little bit of money, I'm a bad person, I'm behind, I'm too old. We talk ourselves out of making money, yet we're comfortable with working at our jobs, which again is fine, but that's not gonna be enough. Yeah. What else are we doing? And it's like, if I sat and taught a class, Here's how you can buy real estate with $100,000. Nobody's coming to my class. Because the average person doesn't have $100,000.
Yeah.
But the reason I call it that is because I know you have at least $200. 100%. And I know you think I'm crazy to show you that you can invest in real estate starting that small, but in reality, you actually can. And it's like we have to get out of how we've been thinking and start to unlearn that old way of thinking to create the life that we want. Because what got you here is not going to get you there.
That's good.
In order to build wealth, you have to move different and think different, and you cannot do the same things. And sometimes, like our oldest member in our app, she came to our last year's summit, was 80.
Wow.
Like there's an 80-year-old woman
Investing.
buying REITs that's investing, and she's not afraid. So if you are watching this and you are not 80 years old, you have no excuse to start investing because she's 80. Yeah. Like if anybody could feel like she's behind, right? But I tell people, if you're older, what if you live another 20, 30, 40 years? What if that woman who's 80 lives another 25 years? She's actually on her day one right now.
Wow.
We look at it like we're behind, but in reality, I mean, I feel behind sometimes. I'm 36. But it's like, how about today is my day one? How about I just start? You can't win the race if you don't put your front foot forward and keep progressing. So I think it's just letting go of who we think we are and who we have been and focus more on who we know we deserve to be and start shifting your belief and knowing you deserve to be that person.
Yeah. I think it's unlearn and relearn.
Yep.
Like we got to unlearn and relearn. And Warren Buffett says this, he says, if you don't find a way to make money in your sleep, you'll work until you die.
Yeah.
So powerful. You was just talking about like, we got to get educated. There's really a new way. And now I guess stocks aren't new, but a lot of things are new to us.
Right.
We just got to do it. What has been like a powerful piece of advice that has helped you that you might have heard, or something that was like, you know, I got to act on this? Is there anything that, because lately what I've been doing is I've been hearing like, I just been hearing a lot of different advice from people, and I just been storing it. Like one of them was, one of my guys said to me, my daughter just moved out. She's 20 and she's doing great online. She's an influencer or whatever. And he said, listen, Destiny, when things are the easiest, that's when you go the hardest. Mm-hmm. And when he said it, it just really like, man, I gotta take full advantage of everything I have now, even if I believe it's easy, I gotta max out. So that was something that really was resonated with me. But has there anything that has resonated with you on your investment journey where you like, oh, I really gotta, you know, I don't know what was the moment that made you say, I gotta basically be the person that's going to go save all of these people in the world. And I know you serve everybody, but our black and brown people are golden age, and you're serving people that's 40, 50, 60, and really, you're almost championing this idea of helping people buy REITs, learn the stock market. Why though? Like why?
So I don't know if I have a real answer to this that's going to make actual sense. Yeah. I think I spent so much of my time when I was at Howard and working on Wall Street chasing money. And I thought money is what identified me. Money is what made me good. Money is what made me worthy. And then when I got to Wall Street, you know, I have the good job. I'm making 6 figures. I'm making money. And I just wasn't happy. And it's like, but then also when you're around people that have money, you realize when you're chasing money, you're never going to have enough of it because there's always going to be somebody with more. So I'm chasing and running this race, looking for fulfillment. And then next thing you know, I'm in the bank account of a billionaire, and my little $90,000 I'm making a year plus bonus, like this is nothing, right? And I got to a point where I started to operate here versus here. Because when you operate from here, it's coming from fear, doubt, worry. When you operate from here, it's more of alignment. And so when I left my job on Wall Street, it was scary here, but it felt right here. When I wanted to financially empower the world, it felt good here. And so I think we go from, and this here is scary because your brain is wired to protect you. Yeah, so of course 100%. Up here, you already making 6 figures, you got a good job, you done went to college, you done did everything you could to have this fancy job, this great job that you thought was your dream, but here you don't feel good. Here matters more to me. And so I started to pay attention to what felt good here. What felt good here was teaching people. In reality, what most people don't know, I actually wanted to be a teacher. And I didn't choose teaching in college because here, teachers to me didn't make a lot of money. Yeah. And I needed money because in my mind, money here is what made me worthy, is what made me shine, my career, my accolades. And so the moment that I left Wall Street, which was July 12, 2013, I stopped operating out of logic and I started to do what felt right. And so the more I did this as what felt right, the more I created money, the more opportunities, because it then went from operating out of fear and lack to a place of presence and abundance. And now, I'm not gonna lie, I go back and forth between here and here sometimes, but for me, you couldn't pay me $100 million to stop doing this. Because if I wanted to make money, I'd have stayed on Wall Street. It took me years to make the kind of money I make now. I would have stayed on Wall Street if money was what I really wanted. But in reality, my cup is filled when I see somebody 80 years old coming to our event. So she came to our summit, came to our celebration, brought her daughter, gave her an award. Her daughter's on stage crying. Her mother's on stage. They're hugging me. And there's an 80-year-old woman like, I came to the summit and I'm investing and I'm doing so much for not only my daughter, but for my grandchild.
That's good.
And so in my mind, you can't pay me enough to have that feeling. And that feeling didn't come from when I served that woman, I wasn't trying to make money off of her. I wanted to tell her, because I know when you're no longer here, your daughter's here. And she has her child. So, and again, that image I saw on Wall Street, except it was perfect. The kid was set up, the kid was set up, the grandparent, everybody was set up. But specifically in the Black community, the first person in the family isn't set up. So it's like, how can I show the world and be an example of something that does not look like Wall Street to show you that it is possible so that you can borrow my confidence, borrow my belief, because if I put you on Wall Street, you might not survive. If I put you on Wall Street, you might not like it. You might get intimidated like I did, but in reality, I need you to see my face to know you can do it, because I know you probably don't want to work on Wall Street. You probably aren't going to go to Howard. You aren't going to major in finance. That's not your God-given purpose, it's mine. So I think to answer your question, I think it's something inside of me that I felt here that has called me to serve the world. And I've tried to get rid of it, because you're right. Like, it's sometimes I say to myself, like, you really want to sit and serve a world of people who don't know who you are. They're probably going to think you're scamming them. They already don't trust you. They doubt themselves. You know that these exact same people you want to serve probably would not do the same for you. You know, you could just go get a good job, get a nice house with a nice picket fence, get you a nice family. But in reality, that's not happiness to me. Waking up every day to do what I do, that's happiness. Yeah. Learning how to figure this out, doing it hard, that's happiness. Yeah. Learning how to serve the world and make people believe in themselves, to me, that's happiness. And so I was looking for the joy in the process, and I just so happened to find a way to make money doing the things that made me joy. And when you live life, there's a different type of fulfillment that comes, but there's also a different type of openness you have where the opportunities start to come. Like, I was just talking to someone that was at my house earlier today, and like, you know, what were the business things you did to make money? And I'm like, it wasn't the businessy things that I did that made me money. It's the becoming of the woman I became that then made the money. So I focused on my becoming, then the millions came. I wasn't doing $1 million strategy. I had to become a woman who wasn't afraid to have $1 million, because if you'd asked her beforehand, she was afraid with money. So why would you give her $1 million when she had doubts of even being a millionaire? And so I think the becoming and the joy and the evolution of my growth is what's poured onto the world. And that is what makes me feel good inside. That's the best answer I can give you.
That was a long answer too. She went deep, but no, that's important. No, I think is almost purpose in a nutshell, really. It sounds like that's like purpose. That's probably why you're here, to really just save and help a lot of people. Let me ask you this. I want to switch gears a little bit. I want to get some questions answered just that I don't know that I would like to know. So OpenAI they're saying they're worth $500 billion. Why would I go do an IPO? Like, why would I now go from a private traded company to a public traded company? Is there a reason why they would do that if they're worth $500 billion?
So I can't fully answer this question, because it's a decision that a founder has to make, right? Okay. Because when you think about running a company, you need access to money. Yep. You can borrow money, or you can issue equity. So you can be a private company and you have private investors, meaning your information is not public knowledge. That means I can go to you and say, hey, do you want to own a piece of my company? In exchange for your money, you own a piece of my company. When you become a publicly traded company, you now open yourself up to the world. You're still raising more capital, but you open yourself up and not just going to an individual person or institution. You are now allowing everyone in the public to own stock in you.
Yeah.
So I can say, like, for me, if I've considered having an IPO, right? But it's only because I want to be a Black woman who runs a publicly traded company, right? That is just a purpose thing. Do I really want the public be an owner of my heart-centered, loving business?
Yeah.
Maybe not. I don't have any investors now. I don't even know if I want private investors.
Yeah.
And so I can't speak for every founder, but it's a business decision that they believe based on the trajectory of how they want to take their business. So like, I've had investors approach me, ask me like, what's my exit? Do you want an IPO? Do you want to sell your company? Do you want to keep it private? Everybody has different ways that they want to run their business. But it is an opportunity to raise capital, to get more exposure, and to really scale your business. But it really depends on the founder of what they want to do.
So let me ask you, as you broke down everything with the IPO, like, I'm thinking I need to get that IPO. But like, is the IPO, that mean initial public offering?
Yeah, it's the first time, yep.
So is the IPO, just so I understand, because I'm not privy to this. So let's say Sam Altman, he owns OpenAI, there's investors now. Mm-hmm. Is that an IPO, or is the IPO when they put it on the stock exchange?
Yeah.
So that's, tell me about that.
So when he created his company, in order for him to scale, he raised capital. So he went to venture capital funds, people with a lot of money, and they now own a piece of his business.
Okay. Is that an IPO?
No. So that is you just raising capital to scale. Okay. So those are private investments.
Okay. Is that what they call seed A? Or?
Yeah.
Okay. All right. I'm trying to learn this stuff. I'm for real.
Yes. So series, you go through series A funding, things like that.
Okay.
Yeah. And the more you raise, ideally, the faster your company can grow. You're looking for an exit. You're looking for an IPO. So a company is investing in your Series A because they're going to give you money. They're going to have a certain percentage of equity, and that money is going to fuel your business. And you keep raising to either have some sort of exit. Somebody buys you, you have an IPO, you have some sort of exit where those investors can now cash out. If you choose to go public, which some people do, you then can also cash out. A lot of those investors as well typically will cash out. And but at the same time, you don't have to. So when you have an IPO, it's an initial public offering. Now, and this goes for everybody. IPOs, especially big IPOs, are sexy, right? However, it's just that can be sexy. It doesn't mean that whatever the price point is when it hits the market is what it's going to stay at, right? So I remember I was on Wall Street when Facebook had its IPO, and it was a big deal, and the price dropped. And I mean, now look at where Facebook is. That was in 2011, 12, I don't remember what year I was on Wall Street. And it took Facebook years to be the Facebook it is today from a stock price standpoint. Right. So sometimes I personally don't always buy into IPOs because it's everyone being hyped, and it could drive up the price or drive down the price versus letting it marinate. So that's it. But there are some people who get in on an IPO, and then to be honest, the people who get into the IPO first are the accredited investors. And those are typically the clients that I had on Wall Street. So before Facebook had an IPO, before it hit the stock market and the public could buy it, on the secondary market, they came to the clients, our Wall Street clients, and they got in first at that price point. Once the market opened, the price then moved. So
levels the wealth.
Yeah, it is.
So they get so right now, Sam in there like, yo, this going to drop, huh? I advise y'all to buy some shares of this.
But once it hits the market, people buying, selling. Now it's you belong to the public now. Yeah. What the public is doing.
I saw, and I don't know if it's true, but Elon Musk texts Larry Ellison, owner of Oracle, like, yo, I'm about to buy a Twitter. You want, what you got? Like, I got $1 billion to it. I'm like, it's just different, like those levels. And I know you were. I
mean, we do the same thing. It's just on a smaller scale. It's like you and your homie going out. You want to get in on this property with me. It's the same concept. It's just on a larger scale because we might see $1 billion, but in our mind, we might do 1,000 or 1 million. It's still business. It's just on a different level, and it impacts a lot more people because of what they're trying to do.
That's good. Let me ask you this. So you got this cash flow creation summit coming up where this is about your third year in a row that you did this, fourth. Wow. You come together and you are basically teaching everybody how to build wealth in a holistic way from debt, explain what is it that people can expect. And then I'm excited that you have two amazing guests here who's going to be joining the summit so they can actually ask a question similar to the summit. You are literally, I love the summit so much because it's like people are in the room and I'm able to get like Ashley's going to actually answer my question on where I'm at and things that I can be doing to be better. So I want to talk through what is the summit, how can they register, and then I want to open up for questions.
So the summit we created is a once a year thing. This is our 4th one that we're doing. Literally over 7,000 people have come to this actual event. It's a virtual event over the course of 5 days, a couple hours in the evening, where we're going to talk about dividend stocks. So how can we invest in those companies that can help us through retirement? We're going to talk about real estate investment trust, REITs, which we talked about, how I can get into real estate for less than 200, but still build passive income. How can I understand my debt, not let it hold me down, become debt free and create cash flow so that I can live the life that I want? And also the most important piece, I think, is also how do I take all of this and properly package it together and pass it down to my family? And so it's really getting people in the room. One, it's nothing but energy, momentum, clarity, structure, and just excitement that literally pushes people to the next level to close out the year. I think we all have financial goals at the top of the year. We need to take inventory of what we have and have not done, but at the same time, how are we going to finish this year strong? What are we doing? What do we need to learn? Making sure that people come to this summit, they come out of this summit as a passive income creator. They come out of this summit with the structure to build a 4 and 5 figure passive income portfolio. They come out of this summit having their accounts open, understanding the types of accounts they need so they're in a position to retire. But also too, I think one of the things that limit us or stop us from creating the life that we want in a year is momentum. We're always excited at the top of the year, but what is it when we're in month 10 and we're burnt out, we're frustrated, we're beating ourselves up because we didn't do this, but at the same time, how can I recharge your energy like it's a day one, January 1st of the new year, and that's what we do. And then we also have different bonuses. We've got giveaways. We're also doing live Q&As for all the platinum ticket holders. Before the summit even happens, they're able to ask their questions. And it's so interesting because we had a session yesterday with people who are going to the summit. And someone said they actually like the Q&A part better because that's the first time that I'm actually able to see people be open, honest, and vulnerable, and I can see myself in them. And that's literally what one of the attendees said. And I'm like, I never thought about it like, because that's where you come in and say, look, I have this, I have this, I have this. I don't know how to do this. Well, what do you know about this? Next thing you know, the thousands of people are watching you. They now see themselves in the person asking the question, but they're getting an honest answer from me as if I'm sitting there coaching them. And so I don't know about you guys, but I'm that person now. I sit in front of the class. I need to have the best seat.
Me too.
I need to talk to the professor. I am saying after class, I have all the questions. And that's kind of what we give the people who are platinum ticket holders, that opportunity to get that support, to get that.
It's not like a mastermind. There's got to be tens of thousands of dollars. It's a few $100, right? It's crazy. Like, to learn, I want y'all to put this in context. Go to cfcsummit.com. You're going to come learn from somebody who's been doing finances for, I don't know. I mean, I've met her. We both were in the city of Philadelphia, like, teaching. Like, I was teaching entrepreneurship. She was teaching faculties and kids about stocks. Like, I'm talking about ingrained in the education on Wall Street. I don't know no one more qualified that got the credentials that can really show you guys how to do this. But I really need you to know, 2 days, a couple hours every single day. I'm like
5 days.
Excuse me, 2 hours a day, 5 days, guest speakers. Like, when I say the amount of detail and intentionality that Ashley and her team puts into this is like far enough. And she got this other concept. There's no man left behind. Like, you're going to come here and you're going to learn. Like, I still remember, like, one of my first activities I did was, you got us getting our accounts together. I got a note in my phone with every bank account now. I got the routing number. I got the account number. I got the password. Like, I now got all of that stuff. I don't know about you. I know you, but you know how liberating it feels to know I have all of this in one document now that someone, my wife and my mom have. But those things are just, that's a 1% of the summit. So you have two amazing guests in the audience. Woo! Clap it up for y'all. Ladies, would any of you have a question that you would like to ask Ashley live on air? Introduce yourself if you have one, and let's take a question or two.
My name is Carrie Brown. I'm a practicing orthodontist in Columbia, South Carolina, and I'm also a Howard grad. So great.
Howard in the building.
My first question for Ashley, you've said a few times about structuring your money so that your money doesn't run out, so that my kids' kids, and their kids, are well taken care of. Are you talking about basically creating this trust and letting the trust manage your money moving forward?
So a couple things. So it's levels to this answer. The first thing you do, so yes, the trust can implement those things for you. The trust can house it for you. The trust literally has instructions they have to follow. What I learned though, because before I had a trust, I thought the trust built the whole infrastructure. You actually have to provide the instructions on what you want done with your money. The trust just makes sure it's get implemented legally. So that's actually getting the trust and signing the documents. That's cutting a check to an attorney, but you have to know how to position it so it never runs out. So with me in particular, and we actually talk about this during the summit, you have to take inventory of the people who are your beneficiaries, right? So let's just say you have 1, 2, 3, 4, 5 kids. Every child is different. You have the one child who and you have to be honest, will blow their money. You have that other child that might be responsible. You have that one child that might be on drugs, that might be do crazy. You have to take inventory of who is the recipient of your wealth. Then you build the instruction. So when I think about if I'm going to leave money to my sister, if I'm my sister and she receives this type of money, how do I think she'll handle it? You also have to take into consideration. So for me, it's also when you pass down your wealth, if your family has never seen that kind of money before, you can't expect them to even know what to do with it. You knew what to do with it because you created it. But you can't just drop hundreds of, you can't even give somebody $10,000 if they've never seen it before. So it's taking inventory of the person who's a recipient, understanding their thought process. And if you were with them by their side and they received that money, what would you have them do? Those are your instructions. Because at the end of the day, I'm writing my instructions. It's my money. You're the beneficiary, but I'm going to give you money to blow. I'm going to give you money to pay off all your debt. I'm going to make sure that when I pass down this house to you, you have this much to cover the taxes because I know you've never owned a home. You don't know that there are taxes that are associated with it. And if you don't pay those taxes, you're not going to have that property. So it's really taking inventory of the person who's receiving. The trust then writes the story of what I want you to do with the money. So for example, let's say I leave $1 million to my family. I'm not giving you $1 million. But what I will do is put that $1 million in, let's say, a REIT like Realty Income. That $1 million is going to produce $60,000 a year. You're going to get that $60,000 a year, which is what, around 5, 6, however much a month. That's your money. So now no one touches my $1 million. I'm producing $60,000 from the REIT because I told the trust, buy these REITs. And the trust is the person who's running the trust are going to buy those REITs. Now give them the dividend income. Don't touch the $1 million, you keep the dividend. Now this person will have money for the rest of their life because if I gave them $1 million, they're going to blow through it. So, and this is where things like the summit, when you learn the basic to investing, you'll know what to do with money because you now know that a dividend paying investment can ensure you never run out of money. That same concept I just gave you is how people retire. You're just doing the same thing, but putting it in a trust, and the beneficiary is your family.
Wow.
Yeah, no, it goes deeper. The trust is just the entity that implements your instructions. So it literally took me like 8 hours to get all my accounts together, determine how much money I have, and then to build a story because if something happens to me, I could not fathom my family spending all my money. Like, that's not why I'm here, but I also will accept that I'm the finance woman in my family. But also, too, I have things like, you can't get this until you take this class, and when you take this class, then you can get this. There's stipulations around you, or my niece can't get money unless she gets these type of grades. She can't get this until this age, and so she doesn't get all the money, but it is dispersed over the course of her life, So.
And it's so crazy when you said, Ash, it just started bringing back, and be honest in the comments if you messed this up, but there's been so many people that I know, whether it's a case, when they turn 18, they just get a windfall of money.
Yeah.
And I don't know no one that has successfully not blown the bag. I'm talking about in a year. I mean, they get 20 grand, 100 grand, 200 grand. So essentially, there was nothing in place on how that money should have been spent. Is that has been a...
Yeah, but you got to think too.
Wow.
You can't expect people who have never had the type of money to know what to do with it. It's like we get mad at athletes or celebrities. They blow all their money. They didn't know what to do. They were good at, like you said, phase one. They made the money.
Wow.
But it's another thing to know what to do with that kind of money if you were not raised in that environment.
Wow.
So you have to accept the fact that that's your family. You have to accept the fact they don't know. You're going to do everything in your power to expose them. But sometimes, especially if they're your kids, they might not listen to you. We have people who come to the summit, they bring their kids on the sessions because it's easier to listen to me because they don't know me, right? You don't really realize your parents are right to you like in your 30s anyway. But you have to own that. You have to accept, because the other thing too, it goes deeper. Let's say you are leaving something and you have family members. People get entitled when people pass away. That was my mom or that was my stepmom and I should be getting this. No. You're not going to fight. I've already got it laid out. There's another thing too. I'm going to give you a little hack. Another thing you can do too, depending on how dynamic what you're passing down is, you shoot a video. So, hey, I'm no longer here. I know you're sad. It's okay. I set you up financially, but I'm going to walk you through the steps of what you need to do with what I left you because I know they're not even going to be in the physical space to even touch your money. Like it was hard for me to even go through my father's things, but this is what I do for a living. My mother couldn't do anything. So now if you have family members that couldn't do anything, how are we paying for the funeral? How are we getting these things in order? Some people don't touch their family's money for years because it's just hard emotionally to do it. But shooting a video like, okay, look, I have life insurance. There are X number of policies. This is the amount. Here's what you need to do. You got to go here to get the death certificate. You got to go here, the number that you call, I've already laid it out for you. Call, you're going to then receive this. But to avoid even all of that, it goes into a trust. So everything goes into a trust. And nothing gets dispersed to anybody and their social security number and them individually, it goes to a trust. Now the trust then has instructions. Every year I have instructions of what to do with the trust, with the money, the types of investments to have, who gets what they can and cannot do to get the money and putting them in a position. Because it's also like you could pass down money to your kids and they don't know what to do with it, but then they don't work for anything. Like I can easily turn my niece into a millionaire and she's already kind of entitled because I'm like the rich auntie and I love that. But I'm still not giving that girl millions of dollars. But I can make sure she doesn't take out a loan to go to college. So if I'm here, she's not taking out a loan. If I'm not here, she's not taking out a loan. And really consider that. And another thing, and I'll leave you with this, think about what you would have done, knowing what you're learning now and what you're going to continue to learn. What would you have wished someone done for you at what age? That's what you do for your family. I wish somebody would have taught me finance in high school. Cool, that's why Empify was created. Before I give you money, you take these classes at Empify. You have to make sure you graduate this, get this certificate, then you'll be awarded this. And I wish someone would have got me life insurance early. You know what? The trust, we're going to get everybody life insurance. We're going to take this much. Here's where you want to go. But see, I'm a finance person, so I'm going to tell you what company you're going to go to. I'm going to tell you the agent you're going to go to. But again, mine is very, very, very specific. But at least you're setting the standard of, I don't want you to wait to do the things I learned to do later in life. I'm going to make sure you're doing it early, but I'm going to do my best. And if you were to listen to me, this is how I would teach you. This is what I would do by your side if you had this money. And you just write it out in a trust like that. Yeah.
Wow, that's good. So please share your question.
Hello, I am Kimberly Harrell.
Hello,
I just want to first thank you all for the opportunity to be here and ask my questions. And I'm excited about the summit that's coming up as well.
Let's go.
I am a graduate of Southern University in Baton Rouge, Louisiana, another HBCU. I have some questions. Well, I'll ask one right now. This is tied to the single person with a good job, makes good money. And my question is tied to making this passive income that you're speaking of. Okay, for that individual who does really well for themselves, okay, it's great. But at the same time, I want to dive into like the stocks and the REITs and getting into that space as far as like IRS. Now I'm thinking about IRS. How do I marry these two up together? One, you already have challenges. One, you don't have any kids. You have a great job. You're single. All of those great things. But now I'm diving into the other aspect of building passive income on top of my current day job, right? So what are some of the things that you would recommend for that class of individuals to start to consider? Because in my mind, I'm believing even after this summit, I'm about to be making some passive income, right? But I want to know what to consider from a tax liability standpoint.
Right. So, all right, I'm going to be upfront honest with you, because I get this. You asked it in an eloquent way. People ask me this all the time. If the first thing you think about with making more money is taxes, you're already thinking wrong. Because when you had a job, you pay taxes. Whether you make $1,000 or $1 million, you're going to pay taxes. You can't avoid it. So one, you got to make peace with the IRS. But what I will say is, and it's so funny, I said the same thing to myself. What if you have $1 million tax bill? What if you had a great accountant, had some write-offs, and you ended up paying $1 million in taxes? How much money did you have to make to pay $1 million in taxes? Because you only pay taxes when you make money. So instead of letting taxes guide you, make the money, and you can have the money to pay someone to tell you what to do with the taxes. So yes, those are things to take into consideration, but there are ways to get a lower tax bill. But you can't get a lower tax bill until you can pay for the accountant that has a skill set to do that, but you won't have the tax bill if you don't make the money. So I'd rather you focus on, look, I want $1 million tax bill. Because if I have $1 million tax bill with a good accountant, how many millions did I have to make already that I get to pocket? Because you're gonna pay taxes regardless. The difference is you don't see it at your job. What comes, you pay that bill. I mean, you get that net pay, the taxes already come out. You have to focus on making the money because the taxes are gonna come. But I literally sit there and say, girl, you dreamt of this life. You dreamt of this. It took me years to cover my tax bill, my first price, 5 years as an entrepreneur. And it's like, girl, you're paying your tax bill in one transaction. You don't need a payment plan. You got one transaction, life goals. And you sitting here telling me you want to build $1 billion business? Imagine what my tax bill would be. So instead of having a negative relationship with it, embrace it. This is what comes with making money. So I'm okay with paying taxes, but I feel even better because I know I'm in a position to make more money and lead with that. Now, in regards to what you're going to invest in and how you do that, we'll cover. I got all of that for you. That's the easy part. I would deal more with the mindset because yes, even though you're single, the people who have full-fledged families have the same question. But in reality, you can't avoid the tax man. And if the more you make, the taxes you're gonna have to pay, and that's okay. But I'd rather want you to pay taxes because you want to make more money because you don't get a tax bill if you don't make any money. So if we spend time focusing on making the money, it's gonna come with the territory anyway. So yeah.
That was good. That was a good question. Did y'all could you want to do one more, Ash?
Yeah, it's fine.
Sure. It's funny that you answer the question that way because I remember after my first year working, I had that same question to my accountant and he said, well, Carrie, look at it this way. You made the money, so you have to pay these taxes. So that was very eye-opening. My question is just this. I've taken other real estate courses and there's like always just a little mention of REITs. Why don't most people talk a lot about REITs? Because it seems like the simplest thing to do to make passive income.
So this is funny. So we actually have a partnership with the National Association of REITs, and they come to us because we know how to educate people about it. The reason a lot of people don't talk about it yet is because REITs were typically an institutional investment. So companies, pension funds, institutions were REIT investors. It was never really positioned as a retail investor where the everyday person. Now they're trying, so that's why they have partnerships with Amplify. It's like, how can we get more people involved in REITs? Because it was one of those things that only institutions talked about. It wasn't something that everyday person. And if we're being honest, even the conversation of investing, period, forget a REIT, that's been over the past 5 years. Pre-pandemic, people weren't really, you see a lot of people on the internet talking about investing and things like that. I wanted to do this and have been doing it since 2013, but that was a career path I chose. So the idea of making extra income, the idea of working from home, the idea of passive income, we weren't talking about that 10 years ago. So the idea of investing as a whole in our community, as individuals, it was a thing that Wall Street did. It was not something you could just look up on the internet and they're talking about it on social media. Now the world is different, so it's more in your face. But REITs literally have been in institutions' ideal investment, not in individuals. But you can buy a REIT inside your brokerage account. Like you said, it is fairly simple. The more you learn, you'll realize, like, why didn't I learn these things? But the more people like come to our summit, the more people like are in our academy and they're learning from us, you're always saying, why didn't I learn these things? It's always been there, but why would you have? It's not in the school curriculum. You don't come from a family of investors. So technically, you had no reason to even get exposed to it, right? So I think it's just us accepting we were not in that environment, but now we are. And I spend a lot of time at Amplify working to create that environment so that it's something that is of the norm for our community, so that your kids, when they get to be your age, are not saying, why didn't I learn this as a child? When now it's something the world is talking about, because I feel like the world is ready for something like this. They weren't ready 10 years ago.
Powerful. Powerful. Did you have one more?
I'm just going to touch back on this, the REITs part of it too.
Okay.
So one last little question. So I'm definitely interested in getting to the REITs, like my good friend Carrie just mentioned about, getting into why was it, not really widely advertised or taught, those types of things. But now here we are, like you said, we are now embracing and at that place in space and time right now. So my question to you, do you recommend that individuals starting out, such as myself, really focus in and hone in on the REITs aspect, trying to get involved in the REITs as opposed to getting into stock options and calls and things like that? I've been just reading a whole bunch of information, staying up late. Right. So that's a question that I kind of have.
So the way I look at Amplify, my company, is we are the company that opens the door to the restaurant. For so long, you've been walking down the street, you see this restaurant. You see all these fancy people, you see celebrities, you see, it looks really nice in there, but those people don't look like me. They don't have the kind of money that I have. Amplify says, look, I've been in this restaurant, the food is so good, and there is no age limit, there's no income limit, there's no gender restriction. Hey, come on in. So Amplify opens that door. Now, what Amplify does, we're your guide. Let's go to the buffet line. You have REITs, you have options, you have dividend stocks, you have all types of food to satisfy your appetite. You cannot put every meal on your plate during Thanksgiving. So you can't eat everything. Now, we have been yearning outside this restaurant for years. So the moment we get in, we want to eat everything, but you can't. So your job now is to learn that I have a seat at this table. It is okay that I've been watching this restaurant, but I'm finally in and I'm VIP. Let me try this on my plate and let me see if I like it. Because you might have options or you might be a trader. You put that on your plate, you taste it, you see the ingredients and you like, I don't really like this. Can I go try REITs over there? Come on, let's do it. And then you might say, I want more REITs. I got it. Now I want to get my side dish. I want to learn about dividend stocks. I want to learn about growth stocks. Your job, as he mentioned it earlier, is to find your identity. What works for you? Because I know people who buy direct properties and don't buy REITs. No one's better than the other. They have a different appetite. I know some people that buy REITs that don't like growth stocks. I know people that look at me like, actually, why you always talk about REITs? You can make so much money here, because that's your appetite. That might not be somebody who's 60 years old's appetite. They don't want to trade. But I do recommend seeing what works. And I think us having the opportunity to take programs and courses is great, because somebody has to create the courses because the school system's not doing it. So that means you have to buy other people's programs to learn, make sure you get what you paid for, get a return on your investment. But sometimes your investment is just to see if you even like the food and accept that I don't like this. I like this. There are women that have come to the summit that do not like growth stocks. They only like dividend stocks. There are some people that buy the risky REITs, won't buy the boring REITs. There are some people who just trade. Nobody's better than the other. All I'm saying is we just need to be at the table. That's all that matters to me, because when you're not at the table, I can guarantee you are not living to your full potential, and you are not putting yourself in a position to build the wealth like the 1% and to create the life that you want. I could care less what you eat. My job is to create a company that can explain what's on your plate. Once I explain it to you, you decide if you like it. I'm just here to say I need you, your mother, your father, your brother, your sister, bring everybody in this restaurant. let me figure out the best way to articulate it so that this language, when you read this menu, you don't know what it says, I can translate it for you. So the more you immerse yourself in building wealth, the more you will see, I like this. I like this too. And you'll just continue to evolve.
That's powerful. Yeah, that was good. And I love how you really answered that. And just, for me, like, I like options, but my lifestyle, my life daily, I like making money every day. But I don't have the physical time to be day trading. So I like to focus on making money in my business and take the money I make in my business to go put into growth stocks, NVIDIA for me, Amazon for me, Tesla for me. And I know them companies should not fail. I don't know if they will, but I know it's gonna beat my bank account. So that's what I learned. Get good at making money in my business. Now get good at multiplying it in the stock market for me with growth stocks. And I buy the REITs too. I do it all. Like I'm in the restaurant. I'm ordering I'm at the Michelin star part. I'm in the hood getting the cheesesteak. I need to see about all parts of this for a second. But yeah, that was good. So man, Ashley, today's episode, wow, it's been fire. I mean, we learned so much stuff from REITs to, and the reason I like the summit, because they go and learn about options. You got somebody coming to show about options. They go and learn about REITs. They go and learn about, the biggest thing that I love is just a holistic approach to building wealth for you and your family. And whatever wealth look like for you, that may mean just making $2,000 extra a year is game changer. It might be making 6 figures. So I know for certain that everybody's going to leave better than they came. I know that for sure. So thank you for being here. Let everybody know, Ash, how they could connect with you, how they could tap in with you.
So our website is empify.com, EMPIFY.com. On Instagram, I am _Ashley M. Fox. On TikTok, the Ashley M. Fox. YouTube, LinkedIn, Ashley M. Fox. And to get tickets to our summit, CFCsummit.com right now. Yeah, I'm excited.
It's about to be good. So thank y'all for tuning in. We will see you guys on the next show. Make sure you put in the comments that you're going to be at the summit. I know I'm going to be there learning. I hope you're going to join me. So I'll see you guys there. Peace.